Hello again, everyone. Thank you for joining us. We are excited to have you all here. I'm Carly Ann with the Parsons Entrepreneur Academy. So here on our network, we like to invite inspiring entrepreneurs and leaders to share their stories and the lessons they've learned along the way. For those of you who are joining us for the first time, the Parsons Entrepreneur Academy is a platform that empowers creative entrepreneurs like yourselves to build sustainable businesses around your art. And we achieve this through our 3 pillars that include mentoring, training, and community. And since launching our platform globally this year, we were recently honored with Fast Company's, honored by Fast Company for their 2021 World Changing Ideas list. Please visit our website, parsonsentrepreneur.com, to learn more about our platform and our product offerings. So for today's webinar, you are going to learn about the 5 mistakes creatives make with their self-employed finances. And also, you're going to learn how you can avoid those mistakes. It will be delivered by one of our esteemed course authors, Andi Smiles. For all of you who tune in today, you will receive a coupon for a 50% discount on Andi's Parsons Entrepreneur Academy course titled How to Manage Your Money and Create a Budget. So that will be, the course is a deeper dive into helping you as a creative to manage your finances holistically. And also as a bonus, if you look in the chat right now, we are dropping a PDF to a healthy financial habits for creatives document. So please click on that now and download it. Andi will be referencing it at some point during the webinar, and it's just a great takeaway for you to hold on to and revisit. So this is how it's going to work. Andi is going to present for 45 to 50 minutes. And throughout the hour, she will be taking questions that are relevant to each section that she covers. So please leave any questions you have about anything she touches on in the Q&A box. And you can find that at the bottom of the Zoom window. After the 60-minute mark, there'll be an additional session for questions. So any additional questions you have outside of the sections that were discussed, please drop them in the Q&A box and Andi will address them there. All right, and now I'd like to introduce Andi. So as mentioned, Andi is one of our amazing course authors, and she authored the How to Manage Your Money and Create a Budget course. She's also the author of our QuickBooks for Creatives course. You guys can check those out on our website. So Andi is a small business financial consultant and coach. She teaches self-employed folks to take control of their finances so they can step into their personal power. She's helped hundreds of self-employed folks organize and understand their business finances while also uncovering their emotional relationship with money. So now I will hand it over to Andi, who will dive into tonight's webinar content. All right, enjoy everyone.
Thanks so much, Carly Ann and Parsons Entrepreneur Academy for having me. I am going to share my slides. Here we go. And let me just kind of organize all my little bits and bops to ensure that I can see the Q&A. So as Carly Ann mentioned, my name is Andi Smiles. I am a small business financial consultant. And I love seeing in the chat where everybody's located, like so exciting that we have the power of technology to view this webinar all over the country, but also the world, because I saw people from other countries outside the US as well. I do want to say that I am residing in Oakland, and I want to take this moment to acknowledge that I am bringing you this webinar from occupied Ohlone land, and that I want to acknowledge the Ohlone people as the original stewards of the land that I'm calling in from or zooming in from. Okay, so let's get started. Welcome to 5 Mistakes Creatives Make with Their Self-Employed Finances. As Carly Ann mentioned, and I mentioned, I'm a small business financial consultant, certified professional coach, and a course instructor for Parsons Entrepreneur Academy. So a little bit more about me. I have been working with small business owners and self-employed individuals for over 11 years. Started my career as a bookkeeper, so I have a very deep knowledge of bookkeeping, and then moved into consulting and finally financial education. So I've basically heard it all when it comes to self-employed finances, because I have worked one-on-one with people just like you know, those individual self-employed business owners for many, many years. And so really what I'm going to share with you today is based on my experience of working with folks and really understanding through the years of working one-on-one with people, the main mistakes, or I don't even like mistakes is a strong word. I like to call them also knowledge gaps, like things that people don't realize that they should be doing, or that maybe they're not doing in the best way. So this is really coming from my own experience working with folks one-on-one. Now, I do want to say, you know, again, mistake is a really strong word. And it's sort of interesting because when you're self-employed, there is like so much to learn, and you are self-employed probably because you have like passion for something, whatever it is that your business sort of revolves around. That's like something you're really passionate about, you love to do, you want to share with the world and make an impact in the world through the work that you're doing. But when you're self-employed, you don't just get to do your passion, right? You have to do all the other administrative sort of like invisible work that goes into the business, right? It's like the back end work, not the forward-facing customer work. And part of that is money, right? And dealing with the taxes, the bookkeeping, the accounting, the entity stuff, like the legal setup and compliance, all of that type of stuff. So when we say mistakes, it's important to have a lot of grace with ourselves, because quite honestly, how else would you know about this stuff if you weren't in a webinar like this? You know, I think that's one of the hardest parts about being self-employed is there's so much stuff you have to learn when you start your own business, and there's not a whole lot of avenues or channels to learn it, which is why Parsons Entrepreneur Academy is so amazing, right? Because it's creating channels to fill in those knowledge gaps. But what I do want to say is that if we're going through this webinar and there's anything that you are doing and you're like, oh, I'm doing that, or maybe you're doing all of them, and that is totally okay too, it's okay, right? This is not a place to shame yourself because you realize that, uh-oh, I've done all 5 of these mistakes, I must suck at money. That's not why we're here. We're here to understand, you know, what you could do better with your business finances. Give yourself grace. Don't judge, don't shame yourself. I'm not judging and shaming you either. I've actually done a lot of these own mistakes in my own business, but give yourself some grace, and also give yourself, give yourself the opportunity to move forward in a different way. So the way that I've structured this is that we're going to talk about the mistake. We're going to talk about what this sort of looks like in people's finances. We'll talk about why it's important that we don't make this mistake. And then really more of the content is around what you can be doing differently and some actions that you can take right away. All right, so with that, let's get started with mistake number 1. And these mistakes sort of like tier up from like the very first, like the first sort of like when you're setting up your business all the way through having a business maybe for, you know, a year or 2. So we're kind of starting at the very beginning. So this is actually to me also the number 1 mistake that I see business owners make. And this is not setting up a separate business bank account. Honestly, if you are like, I can only retain 1 piece of information from this webinar today, like there's 5 mistakes, I can't process all of that, I only want to focus on 1, this is really the one that I would urge everybody to ensure that they're not making, or if you are making it, to take the actions that we're going to talk about. So let's talk about why that is. Well, first, what does it look like? Okay, so what this looks like is having 1 bank account for your business and personal expenses. So basically, all the money you spend is coming out of 1 pot. There is no separation of like, there's a pot for personal, there's a pot for business. It's all in 1 place. And what this also looks like is there's a lot of inflow and outflow in that 1 bank account, because there's both types of transactions, right? you have to go to the grocery store the same day that you need to order office supplies off Amazon, right? And so there's just a lot that's going on in the bank account. And one of the words that we'll use a lot is called cash flow. Cash flow is the inflow and outflow of actual cash, so like real money. And when you don't have separate accounts and when you have one merged account, there is a lot of what we say outflow. So outflow is the cash that goes out of your bank account, right? An actual cash. So when you have everything, another term we use for this is commingled. So when you have your business and personal finances commingled, there is a lot of outflow and typically not as much inflow. So it can get a little tricky trying to balance the two. And the other thing this looks like is not having a lot of clarity if the business is really making money or not. So sort of having this sense of like, I think my business is doing well, I think I'm making money. But if someone were to ask you a question like, oh, what's your average monthly profit? Or how much money does your business make every month? It would be difficult to answer because there is so many personal expenses mixed in that if you're just going off of like, well, what's my bank account balance at the end of the month, you can't really use that to assess if your business is making money or not. Okay, so let's talk about why it's important to have separate accounts. Well, first of all, it makes your accounting way easier. I mean, it's like night and day. It really, truly does make the bookkeeping and the record keeping side of owning a business so much easier. Because if you think about it, let's say you have 100 transactions, so 100 expenses every month, and that's on your bank statement. And let's say 15 of those are business and the remaining 85 are personal. Well, right now, from an accounting standpoint, you have to sift through 100 transactions to find the 15. Imagine how much easier it would be if those 15 were just laid out in front of you, almost like a bulleted list. It would save you a lot of time because you're not constantly having to reference back what something is. There's also less missed deductions with separate accounts. So we're going to actually talk about deductions in a minute, more in depth. But basically what we mean, and this goes back to the accounting side of things, when accounts are commingled, it's often really difficult for people to catch every single deduction because there's just a lot going on and it's a lot of accounting work. And what ends up happening is that your tax deductions, which are essential to lowering your tax bill. And again, we're going to go more detail into that in a moment. Your tax deductions, your deductions slip through the cracks. So we love separate accounts because they ensure that you're really capturing all those valuable tax deductions, which means more write-offs. Now, the other thing about this is that when you have separate accounts, you can actually write off your account fees. So not only are you catching all of those like juicy tax deductions, but you also increase your tax deductions because with a separate business checking account or separate credit card account, if it's not a commingled account, again, that means it's not sharing personal income or expenses in it, then you can actually write off all the bank fees associated with that, which is really exciting, right? Because that's going to help continue to lower your tax bill. And the third reason it's really important is because it protects your limited liability. So this is for people who are LLCs. So when you're an LLC, you've essentially created a legal shield between your business assets and your personal assets. And the point of an LLC is really to ensure that if your business was sued, that nobody could sue you for your personal assets. In most cases, that works. But sometimes there's something that we call piercing the legal shield. And what that means is that the courts can rule that you are not actually treating your LLC like a separate entity. And when that happens, that means that that legal shield gets pierced. It's like, you think about glass, the glass gets shattered and a big hole appears in the middle of it, and people can start to sue you for your personal assets. So one of the things that people look at when they're trying to decide if the legal shield should get pierced is if you treat your LLC like a true separate entity. And that includes having its own bank account. So if you are an LLC and you have not yet separated your business and personal bank account, it's really essential that you do this, if nothing else, for protecting your liability protection. Okay, so like that was a lot of stuff. You might be like, okay, I'm on board. I got it. I got to set up all these different accounts. So let's talk about the types of actions that you would take. And we'll talk a little bit about how to use these accounts, because it's not just a checking account. There are other accounts you want to set up and consider setting up as well. Okay, so let's start with the business checking account. Well, this one is crucial and non-negotiable. Like every person should have a separate business checking account for their business. I mean, that's just kind of like the way it is. So this is the only one that is, I would say, non-negotiable. I think another one of them should be non-negotiable, but people negotiate on it all the time. But this one in particular, you got to have a separate business checking account. And you're going to use that account for depositing your business income. So this is going to be checks that people pay you. If you use a payment processor like Stripe or Square or Shopify, you're going to have those deposits deposited into that account. You're going to pay your business expenses from this account, right? So anytime you need to buy something and you want to use, a debit card, you're going to use your business checking account. You're also going to pay your business credit card from this account. Now we'll talk about credit cards in a minute, but you do want to ensure that you're always paying your credit card from this account. You're going to pay yourself from this account. We're going to talk about paying yourself also at the end of this webinar, but this is where that money should come from. And you will also transfer money to your business savings from this account. Okay, so what do you need to do? Well, you're going to go to the bank, or go to the bank website if you're considering an online bank, and you're going to open that separate account for the business. So you're actually going to open up something. Now, a huge question that comes up at this point in time is, does it need to be a business account? So does it need to be something that your bank calls a business account? This is really going to vary on two factors. One, if you're a sole proprietorship versus an LLC or S Corp or C Corp. So basically not a sole proprietorship, but an actual entity. And two, the rules of your bank. So if you are a sole proprietorship, it does not need to be a separate business account. So it doesn't need to be what your bank calls a business account. It can just be like a regular old checking account. It just needs to be separated from your personal finances, which is great because a lot of credit unions have free personal accounts that you could just basically make into a business checking account. Now, if you are a single member LLC, you'll have to check with your bank rules around how they treat accounts for that type of entity, and that's going to be bank to bank. If you are a C Corp or an S Corp, you are likely going to need to open what is called a business account. So it's really going to depend on your legal structure as well as your bank rules, because some banks may allow you, if you're a single member LLC, they may say, oh yeah, well, that's close enough to a sole proprietor, you can just open it, whatever. But again, the idea here is that the account needs to be opened. If you're an entity, the account needs to be opened under that entity's name and the actual business itself to create that separation. Okay, and then another question that people ask a lot is, does it need to be at a separate bank? Can it be at the same bank that I'm already using? Can it not? And again, this is just a personal choice. It does not need to be at a separate bank. You could have, all of your business accounts at the exact same bank as your personal accounts. Legally, there's nothing wrong with it. It's just more about what's going to work best for you and your business. Okay, so next we have a business savings account. So this is one that you don't have to have, but it's definitely helpful to have. So a business savings account you're going to use for large business purposes, training, and vacation and sick pay. So anything that you're really saving for in your business. I'm sure many of you may have noticed that putting your money away somewhere that is not your checking account makes it a lot easier not to spend, which is why we love these separate business savings accounts. So this one, again, you may not be at this place in your business. You may not be ready for this. You're like, oh, I can barely cover my expenses. Definitely not saving. That's okay. That's totally fine. But just have it in back of your mind when you're at that place. It's helpful to open that savings account. Next, we have the tax savings account. So this is the one that I sort of consider, I would like to be considered non-negotiable, but as I mentioned earlier, people negotiate on it all the time. So the tax savings account is really, really important. Basically, this is a place where you're going to transfer your monthly tax savings. And we're actually going to talk about that later as well. So don't worry, we'll get into that for the IRS and keeps you from spending it. So it's really about keeping that money safe and almost sequestered away from your regular business cash flow, because that money really needs to be thought of as not your money. It needs to be thought of as money that you are like, this belongs to the IRS. All I'm doing right now is like keeping it safe. It's so important to have a tax savings account, because if you don't, it's really easy to spend the money that you're trying to put aside for taxes on other things when it's all inside of your business checking account. And the last one is a credit card. Now, this is not necessary and not required. This is optional. So really, when it comes down to should you open a business credit card or not, it's really important, first and foremost, to be honest with yourself about your credit card style. I was somebody for many, many years who couldn't really have a credit card without overspending on it. I just blew my budget with if I had a credit card. I had very bad credit card habits. And so for me, in the early days of my business, I didn't actually have a credit card because I knew myself, and I knew that I was not going to be able to manage it properly. Now, if you're like me and not the greatest with credit cards, it's probably not a good idea to open a business credit card. But if you are, somebody who pays your credit card off every month, you have really good credit card habits, you really enjoy using credit cards to build credit and points and all of that, but you also are like very, you have a lot of constraint around it, like you're able to like restrain yourself, then a credit card could also be a great fit for your business. But it's most important here, it's less about like protect your liability, and it's more about like, is a credit card a good fit for you personally? Okay, so I'm just going to go back because I see a couple questions. What are about teams who set up C Corps concerning bank accounts? So a C Corp will definitely need to be its own bank account. That a C Corp is considered its own legal entity, so you'll need to open the bank account under the name of the C Corp and the EIN of the C Corp. Resequestered money, should we invest in an IRA or some other high return savings? You could. So for tax savings, it doesn't really make sense to use like high return savings accounts or like a money market or anything like that, because it's really short-term savings. You're basically keeping that money in an account for, like 3 months until you pay your quarterly taxes. So it's not really going to have enough time to earn, money over the long run. But definitely if you're trying to build like a business savings account or like an emergency fund or a cash reserve, so basically something that you're like, I really am not going to touch this. And this is really good for like emergency funds where you're like, I'm not going to touch this money, but I just want to like have it in case something happens, like a global pandemic perhaps. That would be a good candidate for like a high yield savings account, because it would actually have that time to grow and you could benefit from it. But I wouldn't, in an IRA, that's a retirement account. So it would be, you can definitely put money away for retirement, but you would not really be able to draw out of that in case of emergency. Let me go back through here. Oh, sorry, I went too far. Okay, here we are. Okay, so let's move on to mistake number 2, which is not learning your tax deductions. So tax deductions are a really important part of owning a business. Understanding them is important. And a lot of people don't really try to understand their tax deductions until a couple years into their business. So the sooner you learn it, the better it's going to be. So what does this look like? Well, this can look like spending money on business items, but not writing them off because you're afraid to. So basically, you don't have the confidence in your knowledge about tax deductions to truly take the deduction, and you're trying to play it safe. You're like, I don't want to get in trouble with the IRS. I'm worried about breaking the rules, so I'm just not going to write it off. It could also look like spending on items that are non-deductible and then trying to write this off. So this is kind of the opposite. So where one person is like, oh, I'm scared, I don't want to make a mistake. Another person might be like, everything's a write-off. Woohoo, we love write-offs. And there are items that are non-deductible. So it's kind of like erring on the side of being like a little like overly liberal with the tax write-offs. And it can also look like freezing during bookkeeping because you don't know how to categorize something. This happens to folks a lot. They're like, I'm going to do my bookkeeping. I'm ready. I like got my shoebox of receipts. I'm like ready to put this in. And what happens is they don't, as they go through the expenses, they don't actually understand what something is or what category it would be in. Because remember, when you do your taxes, you're going to have to tell the government how much money you made. And then you're going to have to tell the government how much money you spent. But you can't just tell the government, oh yeah, I spent $30,000 last year on my business. You actually have to break it out into categories for them. So when you file your taxes, you're telling the government, okay, I spent $6,000 on advertising, I spent $5,000 on contractors, $500 on office supplies, right? You are disclosing to them what you spent money on. So this is where people get very stuck with their bookkeeping, as they don't know how to categorize something. They freeze, or they go into a Google hole, which takes up a lot of their time, and then they sort of lose that bookkeeping momentum. So why is it so important that we learn our tax deductions early? Well, it speeds up your bookkeeping time, right? So we just talked about that, that it really is the thing that's going to help you get through all that bookkeeping work quickly, because you don't need to Google every expense. It keeps your money organized. If you know what a tax deduction is, and you're not scared of writing it off, then you're not going to be using your personal account for business expenses, right? So what usually ends up happening is that someone is like, this would happen like almost every consultation I've ever done, is I'll say, all right, we're going to review your tax deductions, and we review their tax deductions, and they say, I didn't know I could write off X, Y, and Z, and I've been paying for that through my personal account. So how do I get that into my bookkeeping records? How do I get that into QuickBooks, right? It adds this whole extra layer. So when you're very clear on what you can write off early on, it's going to be a lot easier for you in terms of like the organization of your money. Less tax stress. You know you are doing it right, okay? So like just feeling confident that the stuff that you're putting down into taxes are, like the actual right things is hugely important for your like emotional and mental well-being around tax time. And quite honestly, I would say one of the most important reasons to learn your tax deductions is because your deductions lower your tax bill. Tax deductions have a direct impact on how much you pay in taxes. So let's dig into this a little bit more. So deductions, how do they work? Well, let's say you have your gross income, right? So this is everything you earn before expenses. So when we say gross income, we just mean all the money you've earned from selling your products or services, right? So it's just sales money, right? Nothing's been taken out of it yet. And then you have your expenses, your tax deductions. So let's say that's $20,000. So your gross income is 60 and your tax deductions are 20. Your taxable business income, which we also call your net income, is $40,000. You pay taxes on your net income for your business. You do not pay taxes on your gross income. So obviously, paying taxes on $60,000 versus $40,000 is going to be very different. So we like tax deductions because tax deductions help us decrease this taxable business income. So as I said earlier, really, really important. Deductions directly impact how much you pay in taxes. All right, so you're probably thinking like, cool, I want to know my tax deductions. So how do I know what my tax deductions are? So let's talk a little bit about how the IRS defines a tax deduction. Well, the IRS defines tax deductions as ordinary expenses. So they say a tax deduction is an ordinary and necessary expense for a business. So ordinary means expenses that are common for all businesses, right? So this is going to be the type of stuff that you don't really need to like justify because pretty much most businesses are doing it. So example would be advertising, right? No one needs to make a big case as to why you need to advertise for your business. That is a very common business practice. Bank fees, travel, office supplies, right? Things that are very typical for business owners to spend money on. Those are what we think about with ordinary expense. Software to automate things, right? Like accounting programs, like QuickBooks, like those are things like the IRS isn't going to be like, oh my gosh, you spent money on QuickBooks. Why would you ever do that? Because it's like, because I need an accounting program like every other business, right? So that's what we mean by when we say ordinary. And then we have necessary. So necessary are expenses that are required for you, and it's in capitals because it's you. It's not the global SU. It's the you, the individual you, to run your business. Because all of our businesses are different, right? So somebody who is an artist, like a visual artist, is going to have very different expenses than a digital artist. Just like someone who even is a photographer versus a videographer, they might have some overlap with their industry, but there'll also be things that are different. So these are going to be things that are necessary for you to run your business. Now, an important point on the ordinary and necessary is that the IRS says that a tax deduction expense does not have to be indispensable to be considered a tax deduction. So what that means is that it just has to be helpful or beneficial for you to run your business. So it doesn't mean that it has to be like, I think the necessary word is hard for people because they're like, well, I could technically run my business without it. It's not necessary. So when we say necessary, we mean more like it's necessary for your industry, but it doesn't have to be indispensable. So let's say that you are a photographer and you are buying props for your studio. Could you not have 3 different types of balls for people to have their kids play with in your studio? Sure, it's not necessary for you to have 3 different types of balls for these kids to play with while you're taking pictures of them. But is it helpful or beneficial for you to have 3 different types of balls for you to run your business? Well, yeah, because what if one ball color clashes with the person's outfit? Or what if they have multiple kids and they each want a ball, right? Or yeah, someone says yes because kids are picky, right? So it is helpful. It's beneficial. It's not necessary. You can still be a photographer without 3 different types of balls in your studio. But is it helpful? Is it beneficial? That's really what we're getting to here is with this ordinary and necessary. So a lot of people get tripped up in their mind. They like overthink it where they're like, well, I guess I could do it without this, but now I'm whatever. It's okay. Like, just, is it helpful? Is it beneficial? If it is, it's a tax deduction. Okay, so here's some questions you can ask yourself when you're trying to figure out if something is a tax deduction. First, does it have anything to do with my business? The answer should be yes. It should have some touch point back to your business. You then want to ask yourself, what does it do for my business? Like, what does it have to do with my business? This is just going to help you really understand, going back to this like ordinary, necessary, indispensable, not indispensable, helpful and beneficial, right? It's going to help you just kind of like wrap your mind around that. Another really good question to ask yourself is, would I be buying it if it wasn't for my business? So this is really good if you're like looking at books and stuff or things like that. So like a lot of people are like, well, I really want to buy this book, but like, I don't know, like, I don't think it's a business expense. And I'll say, well, would you, if you didn't own a business, be buying this book on like how to, I don't know, level up your mindset as a business owner? And they're like, no. And I'm like, well, then it's a tax deduction, right? Because like, you probably wouldn't be reading that if it weren't for your business. And that's a really good one for like professional development type of stuff. And then the last question is, can I justify the expense to the IRS? This is the big one, because this is really what's going to happen in audit. They're going to sit down with you and they're going to be like, what's this? How is this necessary for your business? Or how is this ordinary for your business? And you're the one that's going to have to give them the argument for it. You're going to have to say, I have 3 balls in my studio because kids are picky. I need multiple colors in case it clashes with an outfit. And I, do family portraits, and sometimes they have more than one kid. Right? Then they're going to say, okay, that makes sense. And they're going to move on. So it's really about, your, about if you feel like you can justify it. And if you can't justify it, or it's a real stretch, you may not want to write it off. Okay, so how do you learn your tax deductions, right? You're probably all like, I love tax deductions. Well, first, you're just going to research your basic business deductions. So that's just going to be the ordinary stuff. So you can just type into Google self-employed tax deductions. You'll find stuff. Then you're going to research tax deductions for your industry. So these are the necessary. So again, you're going to type into Google something like tax deductions for photographers. There will be something, I promise. And then anything that's unclear or anything that's like super specific to your industry, you want to talk to a tax preparer about for anything that's really complicated or gray areas, because they'll really be able to advise you. Now, I see a lot of people asking questions around like, where do we get a list? How do we do this? Blah, blah, blah. Quite honestly, my course has an entire module on tax deductions, and I go super in depth about like basically what I'm telling you to research on your own. Like we talk about all, like there's 2 lessons, it's so long, on like ordinary tax deductions. We talk about things like home office and mileage and you know, some of these ones that are a little bit more complicated. Unfortunately, I can't go into all of that today, simply because, you know, the time, and that would honestly be its own webinar. So if you are like thinking about the course and thinking about like wanting to learn this stuff, there is an entire module on tax deductions in the course we give you a cheat sheet as well with like a list of all the tax deductions. We talk about, there's a lesson on how to identify your industry specific deductions. All right. So I think that answers a lot of the questions. And I love your question. Could your course be tax deductible? That's right. Yes. The Parsons course is tax deductible. Why? Would you be taking it if you didn't have your business? Probably not. You probably wouldn't be taking a business finance course if you weren't self-employed. So yes, it's definitely tax deductible. I think somebody else asked a question too. Can I write off the fee for my accountant? This is going to really depend. So like you can write off the portion that the accountant bills for the business itself. So like if you're doing like an hour or 2 consulting about your business, then you can write that off. If you are talking to like accountant about like personal investments, that fee wouldn't be. So like, but a lot of accountants are really great about this. Like my tax person bills separately. So they'll bill my business and they'll bill me. They'll bill the business for all the business related returns that they do, and then they'll bill me for all the personal returns that they do. So it's like really easy for me to just use my business card to like pay one or the other. All right, let's talk about mistake number 3, which is doing your bookkeeping once a year. Now, this one's near and dear to my heart because I was once somebody who did my bookkeeping once a year. Even though I was a bookkeeper, I never did my own bookkeeping, and I did it once a year right before taxes. So this mistake, I feel you if you are one of these annual bookkeeping folks. So what does this look like? Well, it can look like putting off your bookkeeping every month because you're too busy or you don't want to deal with it, right? It's just too much, or you just don't have the time because your business is getting busier. It can also look like work piling up and overwhelming you when you sit down to do it. So this is kind of like the next thing that happens in this journey of annual bookkeeping is like you put it off because you don't have time, or you're just kind of like, I don't want to do bookkeeping, that's boring. And then the work piles up. So when you finally have time, you're like, all right, I'm gonna do my bookkeeping. And you're like, oh my gosh, there's so much of this to do. I don't have time for this, or I can't manage this, right? So then the work piles up and it becomes too overwhelming for you. And then it's just kind of like, where do I start, right? And then there's the kind of final phase of this journey, which I know all too well, which is rushing through your bookkeeping right before taxes are due. You're trying to get it all done, and inevitably you're going to miss deductions because you just can't catch them all when you're in that much of a rush. And all of those ones, like your mileage, or writing off your car, those types of things, it's like, I don't have time for that. I'm just trying to get through like the general income and expense piece of this. So people tend to like skim over those. Okay, so why is it important to not do your bookkeeping once a year? And to do it really, what we're talking about is on a regular basis. Well, it's going to keep the work from piling up, right? And that's a big deal because bookkeeping overwhelm is real, it exists, and it'll keep you from doing your bookkeeping. So the more that you have like a process and a system for not having that work pile up, the easier it's going to be for you to get through your bookkeeping when you have those snippets of bookkeeping time. It's going to build your bookkeeping muscle. Okay, so like bookkeeping is a skill. It is, I like to think of it as a muscle, and like any muscle, the more you use it, the stronger it gets. So when you do your bookkeeping on a regular basis and you have a consistent routine around your bookkeeping, you are going to build that skill or that muscle. You're going to be flexing that muscle every week or every month. It's going to get easier and easier. Just like if you were to do 10 push-ups every single day, by, you know, the end of the month, that 10th push-up is going to be a lot easier than it was the first day that you started. The same is true with bookkeeping. By the end of, 3-4 months, you'll be breezing through it. It also keeps your finances up to date. Now, this is a really practical and really important, and we saw this happen a lot last year with the PPP loans. A lot of people needed to get their financial information quickly, and what was happening for folks, or they need to file their taxes quickly. What was happening for folks is that their financial information wasn't up to date. So while the PPP loan application process was actually towards the end there, relatively simple, it was pretty easy what you need to put into the little form or the online portal. The biggest holdup for people were getting the numbers out of the system, right? And so it was a really interesting moment in kind of demonstrating the need for having up-to-date finances, because you never know when you are going to need to take like an emergency loan or something like that. And if you have your numbers up to date, you can very easily pull reports. And emotionally, you will be more willing to do it. Basically, if it's not a huge amount of work, if it's not piling up, if you feel like you're good at doing it because you have that muscle built, if you're running reports and you find them really fun, which most people do, emotionally, you're going to sit down and you're going to like doing your bookkeeping. I've worked with so many people who have said, oh my gosh, I never thought I'd say this, but I love doing my bookkeeping because it feels good, because it's not all behind. So what we're talking about here is a bookkeeping routine. And this is really the thing that's going to keep you from blowing off your finances. So your action item is to develop a bookkeeping routine. And so you want to think about 3 things when you're trying to develop your bookkeeping routine. The first is frequency. So how often will you do your bookkeeping? I recommend 1 time a week. 1 time a week is sort of the sweet spot of not too much, like daily may not be your jam. That's fine. I used to do my bookkeeping daily and I loved it. I thought it was really fun, but not everyone is like me. Once a week is usually really good. At minimum, it should be once a month. It should not go for more than once a month. It's just going to be like too hard to keep up with it and the scope of work at that point. So I recommend once a week, but you do want to think about what's your frequency with your bookkeeping. You also want to think about the time. So when are you actually going to do it? So you want to generally do it on the same day at the same time every week to make it a routine, right? You want to make this piece a routine. And when you're thinking about the time, you also need to think about, when am I in the mental and emotional space to deal with this? You probably don't want to do your bookkeeping on Friday at 4 p.m. because you're done you're like done for the week, right? You're like, I'm over this. That is not a good time to try to do your bookkeeping. Or you don't want to do your bookkeeping, an hour after your kids get back from school and are asking you for things all the time because you're going to be interrupted. So it's really important to think about when am I at my best? Because for most of us, bookkeeping's tough. So when am I at my best? When do I have sort of like the mental energy to take care of this? When am I in a good place in my business? Maybe Tuesdays are your day. You're like, Tuesdays are the day where I get up and I'm just ready to go in my business. That's probably a great time to do your bookkeeping, right? So thinking about the time. And then you also want to think about the tasks. So you want to make a financial task list. So how do you make a financial task list? Well, for 2 weeks, you're going to write down everything you do for your finances. So you're really going to start just noticing, this is not trying to be perfect. This 2 weeks is literally like a piece of scratch paper next to your desk. And you're like, oh, I checked my bank account before I paid my credit card. Oh, I marked this invoice as closed. Oh, I made all these mobile deposits all on Friday. You're just going to write down anything you're doing with your money. And after that 2 weeks is up, you're going to group and order these tasks in a way that makes sense for you, because basically what you're trying to do is develop a workflow for yourself. So you may realize that you pay your credit card every 2 weeks, but the thing that you do before that is you deposit all your checks into your account. Well, then now that's the order that you want to do that in. You're like, okay, every week I'm going to deposit the checks, and then after that I'm going to pay my credit card, right? So it's really about building that workflow. And then you're going to use your list every time you do your bookkeeping. So in the beginning, you're going to need to have that physical list out in front of you, and you'll probably go down line by line by line. But as time goes on, again, it's a muscle. You'll be doing it's a muscle memory. It'll all be second nature, but you're going to use that list to keep you on track for the first, about 3 months. Okay, so I'm going to stop sharing here, and I'm actually going to share this. So I definitely recommend that you use this download that we've provided you with as a place to get started. Now, not all of these are bookkeeping tasks, but a lot of them are, right? Things like logging your mileage in a tracking app once a week, that could be a task. Reconciling your bookkeeping, that's a task. Let's see, memoing receipts, that's a task. Sending out late payment reminders, that's a task. Paying your estimated taxes quarterly. So some of these are tasks. And what I would do, and how I recommend you use this, is to go through and notate any of these things that you also do on a regular basis, or you're like, oh, that's a good idea, I should send out late payment reminders on my invoices regularly. I want to start doing that. Anything like that, you can begin to notate. You can print this out and circle it, and you can use this as the basis of your financial task list. Now, of course, there's going to be things that are super individual to your business, but this is a really good place to get started. Okay, so I'm going to stop sharing here, and I'm just going to go back to my slides. All right, let's move on to mistake number 4, which is not saving for taxes throughout the year. So you see, I promised you we were going to talk about saving for taxes. This is a huge one. And honestly, this is probably the mistake that causes people the most pain in their business, because it's really hard to get hit with that giant tax bill and not have the money to pay for it. Okay, so what does this look like? Well, this can look like ignoring and avoiding taxes altogether, which is something I did for many years. I just kind of was like, oh, that's a thing that'll come around. And remember, I was in finance and I still did this. So if you're doing this, no shame, it is like a real thing. But it could look like ignoring or avoiding your taxes altogether. It can look like planning to save, but then prioritizing other expenses. I actually just talked to my friend about this today. She's like, oh yeah, I have like automatic saving money going into my tax savings account now. It's like, great. And she's like, but I've been using that money for other things. So I was like, no, that defeats the purpose. So, it could be like you've really good intentions of saving and you're trying to do it, but then you always are prioritizing like other expenses and dipping into that account. And it can look into dipping into your tax savings account when you need it. So again, with the tax savings, you really want to think about this as like not your money. You want to think about it as it's like money for your good old friends, the IRS, that isn't really yours to spend. But let's talk a little bit more about how you figure out how much to save, right? Or actually, we'll talk about why it's important. So it helps you avoid a huge tax bill at the end of the year. This is kind of like the main reason, right? It's going to help you ensure that you're not getting hit with a tax bill at the end of the year that you can't afford, and that you won't need to go on an IRS payment plan. It also protects you from paying underpayment penalties or interest. So if you don't make your quarterly tax payments and you're supposed to, you will incur interest and fees. And so this is going to help ensure that you don't have to pay that extra money in fees and penalties. And it gives you peace of mind that your taxes are taken care of. Let me tell you, the first year that I actually paid all my estimated taxes and I knew I paid enough and I was like filing my annual tax bill, I used to get like sick to my stomach filing my annual taxes and being like, oh my God, what am I going to owe? What am I going to owe? What am I going to owe? That first year that I like didn't have that was amazing. I was like, oh, this feels great. I should have taken my own advice like a long time ago. So it really does give you peace of mind as you go in, and it relieves a lot of the stress of tax season. Okay, so let's talk about sort of like the life cycle of paying for taxes. Okay, so first you're going to be saving for taxes, and that's a monthly process, and that's really what we're going to focus on today. Again, it's just a time constraint thing, and my course does go deeper into the next 2 pieces. Then you're going to go through paying your estimated taxes, and that's a quarterly. So you've probably heard about quarterly tax estimates, your quarterlies, your estimates. They're all phase number 2. And then you're going to go into filing your annual taxes, and that is a yearly task. So that is like that final tax bill that you're going to receive, and you only do that once a year. So everything up until number 3 is guesses what you're going to owe. Number 3 is when you actually get like the actual amount you're going to owe, and hopefully you've either paid just around the right amount or even overpaid and you would get a refund. Okay, so how do you figure out how much to save? Well, first you need to know your gross income. Then you need to know your business expenses, right? So this is kind of, we're really starting to build on these other mistakes, right? Because if your bookkeeping is up to date, you will have this information. And then you're going to calculate your net income. So let's look at an example. then you will save 30% of your net income. So once you know what your net income is, you're going to take, it's really 25 to 30%. 30% is really safe. 25% may be okay for you. You're going to take 25 to 30% of your net income every month, and you're going to transfer that money to your savings account. Now, there's another way that you could do this if you if you have a tax person and you've been like in business for a few years, and that's to ask your tax person for your tax savings percentage. Because the thing is that our best practice in like the finance world is to say 25 to 30%. That's like pretty much what everyone will say. But it's super contingent on your personal tax situation, which there's a lot of factors involved with that. So if you have a tax person, you can ask your tax person about what should I be saving monthly, percentage wise of my net income for taxes. My tax person was able to give me that answer like in 2 minutes. So a good tax person should be able to answer that for you, and they'll have a more personalized answer because it's going to be based on your actual tax situation, not kind of like our best practice 25 to 30%. But for our example that we're going to do, we're just going to stick with 30% because it's just easier to use that number. But if you do have access to a tax person, would highly recommend that you ask about your tax savings percentage. Okay, so now let's do an example. Right, nope, not doing example yet. Sorry, I'm like very eager to show you all the calculations. I'm like, example, because it's all kind of like ambiguous until you see it on paper and then you can understand it. But basically what you're going to do is once you figure out that tax savings amount, so it's that 30% of your net income, let's say, you're going to transfer that money directly into your savings every month. Okay, so let's see if this is really example time. It is finally example time. All right. So here is what it actually looks like. We have your gross income. So this is just a pretend example, $5,000. Then we have your tax deductions, which we've talked great length about. It's $1,000. So the net income, which is a positive number, so it's called profit. It's also called profit, is $4,000. So we've gone through phase one, which is just understanding what is my net income this month. Okay, so because it's a positive number, it's profit, we're going to move on to figuring out the tax savings. If this was a negative number, like maybe you spent $6,000 in expenses, there's nothing to tax you on, so you don't need to do this. But if it's a positive number, if you have what we call profit, you need to move on to the next step, which is your tax savings percentage. So in our example, it's 30%. And now you're going to calculate it. 4,000 times 30% is $1,200. That $1,200 is what you're going to be putting into taxes every single month, which I know it sounds like a lot, but when we think about the way self-employed people are taxed and that you're paying federal and state taxes, this is actually about right. So this is why it's really helpful to do this monthly, because if you could imagine trying to do this at the end of every year, that's a lot of money and cash that you need to have on hand. It's a lot easier to come up with $1,200 a month than it's going to be to come up with $14,000 at the end of the year. Okay, so here is your action. So you may be listening to me and thinking, I haven't saved anything so far, so I'm a little worried. So here's how you can kind of get a sense of where you're at. You're going to calculate your year-to-date net income, right? So again, you just need to know how much money you earned and how much money you spent in business expenses, right? And you're going to subtract your expenses from your earnings. You're going to multiply that by your tax savings percentage, 30%. And then if you have made any payments, you're going to subtract any payments you've already made. So let's say that what you are supposed to pay so far this year is $10,000 and you've already made a $4,000 tax payment. So you're like, okay, so I actually have put $4,000 towards what I think I would need to pay. And then I need to pay, I need to pay $6,000 more. So first you want to figure out, am I on track? And if not, you want to make a savings plan. So you want to sort of figure out what you need to do to catch up. The next piece of this is you want to add saving monthly to your financial task list. So you really want to ensure that the monthly process we just went through is baked into the way that you approach your bookkeeping. Okay, I see a question. How much is the percentage of the penalty or fee for not paying estimated taxes? This is a hard question to answer because it occurs daily. So it's not as easy as just saying like, oh, it's blah, blah, blah percentage. It actually is based on how much you owe or underpaid, and then how many days overdue it is. So I can't really give you like a 1%. It's a little bit more complicated than that. Okay, so mistake number 4. I think this is mistake number 5. Yeah, this is the last mistake. Mistake number 5, not paying yourself or not paying yourself enough. Okay, so this is also one that I'm very familiar with. I was not paying myself enough for many years. So what does this look like? Only taking money out of your business when you absolutely need it for personal bills. So this is kind of like keeping everything in your business and like, you're like, uh-oh, I like really need to pay this bill, so I guess I'll take some money out of my business. It also looks like being too scared of taking any money out of your business. So you basically won't touch anything in your business, and you're just like, nope, I'm just gonna leave everything in there. And then it can also look like, this is what it looked like for me for many years, was personal debt or financial struggles. So basically, it's not really sustainable for you. You're really struggling, but you also have too much fear around taking money out of the business and paying yourself. Okay, so why is it important to pay yourself? Well, first, it puts your personal needs front and center. I know a lot of us are running a business because we're passionate about what we do. We want to make an impact in the world. We really, want to help people or serve people through the work that we do. And that's great. But it's a business, which means you're also trying to make a living, and you're trying to live off of the money that you earn, right? So you really need to center your personal needs when you're self-employed. I had a big problem with really centering my business's needs and not putting myself into the mix for a very long time in my business. And it resulted in a lot of personal debt, quite honestly. So it's important that as your business is growing, as you're getting your business up and running, launching it, scaling it, whatever phase you're at with your business right now, that you are always ensuring that your personal you is in the mix somehow. It teaches your business to take care of you so you can maintain that habit as you grow. A lot of people in the early stages say about their business, like, oh no, I'm not going to do anything. I don't want to pay myself yet. I'll pay myself when I get this point, or when I get to this point. And what happens is that point continues to get pushed out and pushed out forward. So you need to teach your business to take care of the personal you in the beginning. And that means it just needs to get into the habit of paying you. And it gives you practice in healthy cash flow management. Basically, as your business gets bigger and you have more financial stuff happening in your business, you are going to have to learn how to manage your cash flow properly. You're going to have to know, how do I account for all the money that I have owed to me but isn't here yet in actual cash, the things I need to pay to other people, and like I need to pay that out of the cash that I have. How do I ensure that my taxes are taken care of? And I am. This is really good in the early stages of your business to get practice at cash flow management and ensuring that you can cover things like paying yourself. I'm not going to talk too much about cash flow in this webinar, but the course does have a lot more on managing cash flow. But that, again, is like a really big topic that we just can't get too deep into here. Okay, so how do you pay yourself? You should pay yourself a set amount 1 to 2 times a month on a regular schedule. So that's kind of the best practice. Now let's break that down a little bit more. So what do we mean by a set amount? Well, there is a few things that you need to know in order to figure out what that set amount is going to be. You need to know your gross income. So I think at this point, you're probably figuring out like, yeah, gross income seems like really important. And your business expenses, aka your tax deductions, what your monthly budget is. So these two things all kind of go back to that bookkeeping mistake that we talked about. Because again, this is all starting to build on itself of like, oh, wow, like this is why each of these are so important. You need to know your tax savings. We just talked about that. You need to know how much you are saving for taxes, that you need to save for taxes every month. Oops, you need to know your, there we go, we're back. Okay. You need to know your long-term savings goals. So if you have monthly goals for saving, like you're like, I want to save $250 a month for a new laptop next year, whatever it may be, or maybe you want to make your first hire. And so you're trying to save like 3 months of their paycheck because you want to be sure you can sustain that, or maybe you're doing an emergency fund thing. You need to know what your monthly savings goals are. And you also need to know your debt payoff goals. So you need to know how you plan on paying off any debt that you have in your business. So I'm talking specifically about business debt and like loans and stuff like that. Are you making minimum payments? Are you paying over the minimum? What does that monthly payment look like? And then let's look at what this actually looks like. You also need to know your personal spending. You need to know what portion of your personal spending does your business need to provide. So you really need to understand, what are your monthly personal expenses and what is the expectation of your business to provide for them? And this is going to be different for all people, right? Because if you're a single person and you cover it all yourself, or you're the primary financial earner in your household, that's very different than if you're somebody who is sharing expenses with another person, or maybe you have savings that you're partially living off of. So it's important to know, one, what is the overall picture for your personal finances in terms of like what you need to live off of, and then what is it that your business is expected to contribute. Even if you're like, I have savings, my business is expected to contribute nothing, still do this exercise and just try to get to some place where your business is doing something for you. It doesn't have to be everything if you're living off of savings, or you have somebody else's whose income you're living off of, but just try to get somewhere with this to, again, teach that business to take care of you. Okay, so here's an example. So we have, and we're just kind of running the same example we've been using throughout the workshop. So we have our gross income is $5,000. Our tax deductions are $1,000. We're back to that $4,000 net profit. Our tax savings are $1,200, right? So we have to account for that. We have to make sure that we have money for tax savings. Our regular savings is $250, so we're saving up for something. Our owner access is about $25.50. Now, the next step of this is, once you kind of, these are all of the pieces that need to come together, you ask yourself, well, what is my personal spending? How much do I need my business to pay me? So let's say in this situation, the person needs $2,500 a month. Well, in that case, this is great. They have what they need. But let's say in this situation, the person needs $3,000 a month. Well, then they need to start making adjustments, right? And the adjustments are likely going to come from the expenses, the savings, or making more money, right? The adjustments could also come from your personal budget. It may be that there are some non-essential expenses that you have to cut out while your business is still growing, right? But what eventually will end up happening is you'll need to do some, I call it a holistic process. You'll need to go through a holistic process to really start playing around with the numbers and getting this to work. Now, in the course, again, there's an entire module or entire lesson on this, and we have a worksheet that we go through like this process, but for you in a little bit more in-depth way. But this is really the overview of how this is going to work in terms of setting up your set amount. Yep, so you're going to make adjustments as needed. Now, let's talk about the scheduling part. So we want to look at how often you're going to pay yourself, right? So you're going to pay yourself monthly, bi-monthly, you can pay yourself weekly. I generally recommend 1 to 2 times a month. That's pretty typical for people who've come from employee jobs as well. It's like, okay, I get 2 paychecks a month, like that makes sense. But you also want to consider like how you are with money. Are you somebody that likes to get paid once a month, and that's really good for you because you really want to like make that money last the whole month, so it actually helps you curtail spending? Or are you somebody that as soon as you get a large chunk of money, you want to spend it all? If that's the case, you may want to break it up into smaller chunks. This is really where your personal financial habits are going to come into play. When will you pay yourself? So when is it that you actually need this money in your account, right? Is it the 1st and the 15th, the 5th and the 20th, the last Friday of the month? This is where you're going to be looking at when are most of your personal bills due, right? Because if most of your personal bills are due by the 5th, probably maybe paying yourself once a month on the 1st is going to make a lot of sense for you, because you'll have all the money that you need for those big personal expenses. Or maybe, you have expenses throughout the entire month, so it actually makes sense for it to just be evenly split, right? Twice a month. This is really going to be, again, based on your personal financial situation. And then how will you pay yourself? Like, what is the actual method? Now, this is where people get really stuck on the how. They're like, but how do I do it? It's really simple. You just transfer money from your business account to your personal account. I mean, that's like literally it. You can also write yourself a check if you want. That's okay too. But it's not much more complicated than that. I mean, people get really stuck on like, but I don't know how to get the money from one to the other. It's just a transfer. I mean, that's really all it is. That's legal. That's fine. That's all you got to do. So, but the how also comes down to, is it an automatic transfer? Are you going to do it manually? Right? Like, how would you actually plan to move that money back into the personal account? Okay, so your action is to pay yourself from your business, right? So this means coming up with a set amount to pay yourself, deciding on a schedule and a method. And then even if you're like, I cannot pay myself that much, I really can't, just pay yourself something. Just do something. Do $50, do $100 a month. Just do something that trains the business to take care of you. It does not have to be all the money in the world, but it does need to be something just to get that business trained. Okay. I see a couple questions. So there's a question. So I pay myself before I calculate profit or after. Is my salary is an expense before business taxes? So the answer is you pay yourself out of your profit. So you want to calculate your profit. And then is your salary an expense before business taxes? Depends on your legal structure. If you're an S Corp, your salary would be run through payroll rule. If you're an S Corp or C Corp, your salary would be run through payroll and it would be a business expense. But if you are a single member LLC or sole proprietorship, you cannot do that. You cannot pay yourself through payroll. The only business structures that can do that are S Corp and C Corp. So that would not be a business expense. You're basically just distributing profits to yourself. And that would not be before taxes. So it kind of really depends on your business structure. I see. I already answered the question about the penalty or fees, but I will answer the question. I think this has to do with like paying out your taxes. What if you don't make any money that year or quarter? So if you don't make any money that year, that quarter for like taxes, there's nothing to tax you on. So if you're operating at a loss for whatever reason, you don't need to go through all the tax saving stuff because there is no profit to get tax you on. We didn't really go into this today about like how people are taxed. But essentially, you're taxed if you're a single member LLC or sole proprietorship or S Corp, you are taxed on the profits of your business. They're called pass-through entities. Again, the course goes there's an entire module in taxes. So I'm really distilling something down that we take a lot of time to explain elsewhere. But essentially, you are taxed on the profits of your business. So if there are no profits, then there is nothing to tax you on. You don't need to save for taxes. All right, I'm gonna, it's Q&A, so it's a great time to start putting your questions in the chat. And I know Carly Ann is gonna talk to you a little bit more as well, so I'll hand it over to her.
All right, thank you, Andi. So before we turn to the full Q&A session, I just wanted to pop back in and tell you all about the discount code that we promised at the beginning. That will get you 50% off of Andi's full course, How to Manage Your Money and Create a Budget. So there you'll get a deeper dive into the topics that Andi touched on today. So if you go to our website, parsonsentrepreneur.com, and go to the course catalog, there you can find Andi's course. And if you apply the code MONEYHEALTH, so you can find the code in the chat. So MONEYHEALTH, MONEYHEALTH, apply that to your purchase to get 50% off. So you have until 11:59 on August 14th, which is Saturday. So take advantage of that and you can get a chance to dive deeper into these topics and have some time with Andi in a live course session. So go ahead and use the code if you are interested in purchasing the course. And if you have any questions, please feel free to reach out to us at pea@newschool.edu. Thank you all for joining us. I'm gonna turn it over to Andi again. so that she can take any additional questions that you have.
Yeah, I don't see anything in the Q&A yet, but I do see a question in the chat about how many live sessions will be part of the course. So this course has 6 to 7 live sessions. So it's 8 weeks, and there's somewhere between like 6 to 7. It just kind of depends on scheduling and holidays and all that good stuff. So the idea is that you have the opportunity to ask follow-up questions. I think it's actually really cool. In the past with the course, people have been able to ask like really specific questions to your business, because I mean, of course, like the challenging thing about trying to do a business finance course for many different types of industries and business types and business models is that you're generalizing information. So with the live course, what's cool about it is that you can really come in and say like, okay, for this thing in particular, how would this work for a business like mine? I am a, artist, or I'm a painter, or I'm a photographer, or I'm a consultant, or we have a lot of people like, I'm starting an apparel line. So how do I really apply this in that setting? And that's really the benefit to the live sessions. Any other questions about anything that we talked about today, or anything that we didn't talk about that you were hoping that we would? When should all of this technically start? Is it after creating a formal legal business entity, or does it start when you beta test products or services? I would say that some of this is going to start as soon as you start earning or spending money in your business. So it sounds like for you, Chiquita, it's really, you're like already spending money, because you are probably, if you have products, right, you're having to buy something, and services, you might even be making a little bit from your beta tests. So it may not be that you're going to be starting to save for taxes right away, because you simply haven't learned, you don't have profit yet. Maybe you're getting everything going. But what it could look like is, the first mistake, like setting up a separate business checking account. As soon as you start spending money in your business, or as soon as you start earning money in your business, whichever one comes first, right? It's not both, it's whichever one comes first. As soon as that happens, you want to set up that separate business checking account. Same with tax deductions. As soon as you start spending money in your business, you need to know what your tax deductions are, right? You need to learn what that is, and as well as bookkeeping, right? As soon as you have income and expenses, no matter if you're making a profit or not, you need to track those, because the thing about being what I mentioned earlier, which is the pass-through entity, right? So that means that for tax purposes, the profits from your business are going to pass on to you. They're going to flow through to you in your personal tax return. It's not just the profits that pass through, it's the losses as well. So pass through, it's like marriage, for better or for worse. Like you make profit or you make a loss, it's passing on to you. Now, when you take a loss in your business, so let's say you launching a business this year, you end up with like a loss of $5,000 because you haven't made any money yet, but you are spending money to get the business going. In that case, that loss is still going to pass on to your personal tax return. So if you have like other income, like the W-2 income, other side hustles, or you're filing your taxes with like a partner, that's going to offset your total income. So it still benefits you. But all of that is to say, you still need to do the pieces, the bookkeeping. You need to track that. So you have to report it. You have to report it accurately, right? You're still going to do the learning your tax deductions. You're still going to do the like setting up the business bank account. May not do the tax savings part yet. You may not be able to pay yourself because you have nothing, you're like, I have no income, right? I'm just spending money, but you still need to do at least those first 3 things we chatted about. For the 8-week course, if I miss a session, is it recorded and available? It is recorded and available. So if you miss a session, all the sessions are recorded. I've actually had feedback from some folks who haven't been able to make any sessions just due to, life stuff, that they watch them all and they're still very helpful. I think Q&As are really great because people ask questions that you don't think to ask, or that you don't really pertain to you, or you don't think pertain to you. And then you're like, oh my gosh, like this is totally something I've never thought about before. So I think Q&As are actually one of the most useful resources for people, not just because you get to have your questions answered, but with other people's questions, it can really open up your like mind about something that you never even thought of. And so we record them and they are available. Claudia, can you claim deductions pass-through expenses from the past? If so, how long in years? This is a hard question. I would talk to a tax person about this because this is one of those things that's like super dependent on your taxes, and there are like could be ways that you could do it because you could amend tax returns. You know, there's different approaches to this question. So this is really the type of thing that you need to talk to like a tax professional about, and specific to your situation, how far back you're going, when was the last time you filed your taxes, is it even worth it to try to bring those through? You know, it might not make a big difference, it might not be worth the trouble. So it's a lot that's really personalized. So this is one I would ask a tax person about your specific situation. Is there some advice to prepare finances before you start your business? Yeah, maybe if someone can, maybe someone from Parsons can get the link to the startup budget blog post I wrote, because I think that that's really like the best piece of advice I can give, is that before you start a business, and before you start like spending money to launch the business, because that's basically like most people have to spend money to launch a business. Before you do all that, you will likely you'll likely want to make a startup budget. Startup budget's really great because it helps you plan for what's ahead. I think that a lot of people, especially people who start businesses based on their savings account, that, you know, they'll use like their savings and stuff. They don't have like a finite, they have like sort of like a certain amount of money they can use. Or even if you have like a W-2 job and you're just kind of using some of your personal income to start the business, it's really, really good to plan that financial piece ahead of time and then keep track of it as you go. So I walk through this entire process in this blog post that they just dropped in the chat. And there's also a spreadsheet that goes along with it. That's a budgeting spreadsheet. So you can begin to plan that way. It's also really easy when you start a business for the expenses to get out of control, because you want to do everything right. You want to do the best of everything for your business. You think like marketing is marketing for a reason. Marketing is really good at making you think that you need something, right? So it's very easy when you're starting a business, think, I need this, I need this, I need this. And the budget really helps keep you honest and really helps ensure that you're making discerning decisions about how you spend your money. And that, you know, even if you're like, I have all the money in the world, whatever, I can spend everything, even that alone can really help you be more discerning about the tools and the investments you need to make into your business, because you always have to refer back to something and think it through. Yeah, awesome question. I love, Chiquita says, so true, all facts. I know, I started a business once too, so I 100% also know that is a thing. Any other questions before we wrap up? Seems like we might be good.
All right, well, if there are no other questions, I just want to thank everyone again for coming. Thank you so much, Andi, for joining us again for another great webinar. Again, if you all look in the chat, you can see the links to the resources that we've dropped in. So the document that Andi was using today, plus the blog post. And don't forget to use the code MONEYHEALTH, which is also in the chat, to get 50% off of Andi's course if you would like to have a deeper dive into these topics and have some more one-on-one time with Andi during her weekly course sessions. Oh, another question just popped in.
Yeah, so will the course cover attitudes towards money? This is a great question. This is actually like something that I'm really passionate about, is our emotional relationship with money. So the course does not go, it's, that would be honestly a different course, like really uncovering that type of stuff. But woven throughout my general teaching style, and really in some of the introduction pieces and the ending piece, the conclusion pieces of the course, we really talk about that and address that, like, real talk, like, money is emotional. It is, right? We have a lot of attachments that we carry around money, and we all do. So it's important that we acknowledge that from the forefront, especially as we are like digging deep into technical financial information. I'll also say that we tend to address that actually a lot in the live Q&As. I had a session where we really at a group where we really, mostly in those live Q&As, talked a lot about the emotional pieces that came up around money throughout the courses, and really like did more work around that, it as like a supplementary. Yes, and Baylen just shared something I wrote for Parsons, all about like emotional relationships with money, and there is a workbook with it, so that can also help you get through that stuff. All right, I think we're good.
I think so too. Thank you so much, Andi, and thank you, everyone. We hope to see you all again on the Parsons Entrepreneur Academy Network for our future events, and hope to see you in our courses. Thank you, everyone. Bye.